Good morning, traders. Today is July 2nd, and we are making our daily recap for the day. Now, initially, when I started this video, I just wanted to show off my trades, which was AHMA. We made $1,100, quick scalp, quick push, and we walked away $1,100 green. When I started, I noticed CETX gapping up as well. So we might as well take you guys through a live analysis of what I think of CETX. So let's start. This stock today moved up on a 1 to 10 reverse split. This is not good news. But this is a perfect example of a stock moving up over 100% where the market can stay irrational longer than you can remain solvent. There is no reason why a stock going on a 10 to 1 reverse split should be doubling in price. Now, you can see what's going on here. I think the 1 minute is more clear. Made a push $2.84 to $6. And typically when news like this hits, it's pretty bearish news. You can see the company in a major downtrend. They have a very long history of reverse splits. And a lot of early short sellers will pile in on the short. So this squeeze was entirely driven by short sellers and I guess some momentum traders, but the news on this stock is just not good. But it made a massive, impressive push. So let's break down what I think will actually happen. Without a doubt, CETX will roll over. The problem is we don't know when. When a company is in such a downtrend, when there is no real fundamentals behind the company, we know that 99% of these companies will fade. But because it's making this push, because there's so much momentum and volume behind it, it may not fade when you expect it to. And that's the danger of shorting this stock right now. You can see from the level 2 here that it made a massive drop to 430s and now it's back up to $5. I mean, I'm just watching this. I'm amazed. You can see heavy selling. 26, 29, 30,000 shares at 472. But it hit SSR. Typically, when a stock hits SSR, it's just not good for short sellers. You see how the 470 broke? It's going to push above it and then just dump right below it. We're just watching to see if I'm right. But typically, that's what a lot of these stocks will do. They have a support level. They have a large order. I think this one, I'm still pretty bearish on this. Now you may ask why I'm not shorting this. Well, it's 10 cents.
CWD.
15 cents now. It's 15 cents to borrow. It's slowly fading below the 470 levels. And when it does, it's going to crack hard. Yeah, so look at that, 450. Yeah, we can just watch this all day. Let me just pull this up here. Yeah, we can watch this all day. I'm not trading this. I'm already done for the day. The reason's because board fees are too high. It has way too much volume and is pushing way too much for a stock with no real good news. Typically, I like to trade stocks that push up really fast and they come down just as fast. Because it hit SSR, it's looking very choppy. I'm very confident it will break down below $4 by the end of the day. But I mean, if I short this now, 1,500 shares, I could very easily be whipped out. If it breaks this 540, I'll be down So if I short now, it's 470s. I'll probably get some slippage. Oh, so it's going back up too. Yeah, I mean, if you look at this price action, it's just so choppy. And if you're trying to short this with SSR, it's incredibly difficult because you cannot short on the bid. You have to short on the uptick. So when that happens, and if let's say a large whale or somebody who wants to short a lot of shares, they need to push the stock up higher first. You won't have a clean move like AHMA where you see this downward momentum and people just piling in. You're gonna have like very, very choppy action. See, look at that, 430s, big
CWD.
seller, and they're just walking it down, and it broke back up above it, right? It's like I said, that 470 level was not a real resistance level. I knew it was gonna break the 470 and come right back down, and that's exactly what happened. When a stock hits SSR, you have to realize that shorts cannot short the bid. So if they can't short the bid, they need to trap more long buyers. So they're going to push it up higher. They're going to cover a little bit. They're going to trap some longs at the top, and then they're going to flush it down. Yeah, I could have taken this short. I mean, but I have a very hard rule, and it's important not to break it. Sometimes you're looking at this and you're telling yourself you're missing a lot of good opportunities, but the ones that you miss will never outweigh the one that crushes your account. So even if I get 5 of these, like if I shorted at 474.80s, I wouldn't be confident enough to hold on to this. There's just too much volume today. It's 10 million shares. I still think it's going to fade below $4, but because my borrow fees
CL
are so high, almost 16 cents right now. Let's see if I can still borrow this. So it's back to 9 cents. So 10 to 15
STZM.
cents roughly to borrow this. But on SSR, there's just kind of holding and choppy. And, how much would I have made? 30 cents, 40 cents? That's still a decent amount of money, but like, look at how it's moving. It's not clean and it's not decisive. I don't have stats to back this up. And if you don't have stats, I don't want to take this trade. I'm already green $1,100. There's no reason for me to jump in on a stock that I don't think will give me a clean move. Like, you can say that if we short in the fives, we would be up $1, and you would be right. But if you short in the fives, what are you risking? I'm just thinking to myself because if I can find a way to justify taking the short, I will. But right now, I just don't see it. If you short in maybe break down below 5, you risk this 40 cents. But you risk this 40 cents, right now you would be up 60 cents. So 1 to 1.5 risk to reward ratio. I mean, I'm just not a risk to reward ratio type trader. I generally plan my stats. I don't care what the risk to reward really is. I look at what my stats will tell me. I look at the level 2, I look at the momentum behind it, and I just plan a risk level that I think makes sense. And right now, nothing that I can think of makes sense. And the reason is pretty clear. It's SSR is moving up and down. It's not making clean moves. It has a really high borrow fee. I mean, I really want to take it. If you've been trading for a while, you will recognize a lot of tickers, and you will recognize that certain tickers have a history of recycling news and headlines just to make a push, only for it to fade. And CETX is definitely one of them. I've traded this one before, just from the name recognition alone. But anyways, we're not going to talk about CETX. We're just going to make a quick daily recap, walk away, and prevent
CWD.
FOMO. So AHMA, quick recap. Yesterday, it pushed from $1.75 to 230s. You can still watch level 2 over here if you want. I'll put up a few of them. And maybe I will put this one here in case viewers still want to watch CETX and the way it's moving. But This one was very quick
RGC.
and decisive. Pushed it from $1.75 to about $2.36 yesterday. Faded and held this $2 level. We took a quick scalp yesterday and we got out around $2. And after we got out, the stock didn't roll over as we expected. It actually made another move. And this move wasn't really driven by momentum because this ticker has no news behind it. It was a lot of short sellers who could not get out. This stock lost all liquidity. And because it lost liquidity, people who wants to get out, they're forced to buy on the ask and slowly push the stock higher. And this move here was just a simple liquidity event. The push from $2.25 to about $3 was just meant to squeeze out swing traders, short sellers, people who were trapped yesterday. And same with this candle here. You can see that after they made this initial push and came back down to 260s, this push was meant to clean up any early short sellers. People who had very tight wrists, people who didn't want to hold, people who were still holding from yesterday. Whatever the reason is, this move cleaned up a lot of people who are bag holding and early short sellers. Long traders, breakable momentum traders, early short sellers. And this flush here engulfed the entirety of this candle. So once it did that, my initial thought was, well, we know that if a stock starts around this 220 level, we know how much it will come back down below. And with that stat in mind, I looked at the resistance and support levels from yesterday, and I can see that $2 is the obvious support, 210, and the pivot, or rather the double top, was at 235. So my thought process was, if I can get a short in the 420s, I can risk the 235. So my risk reward was roughly 220s, less than 5%. I knew that once it broke $2, broke 220, we had a really good chance of retesting $2 and tapping the low of yesterday. So the low here was $1.89. And that's kind of what I did. You can see from my entries and exits, 223, 222, and then I added a little bit more in the confirmation at 216. I covered $1.96 and $1.91. And at $1.91, I was looking for the breakdown below $1.90. I knew from my stats, this one will likely average out in the $1.80s.
CWD.
But when I looked at the chart, I realized that 189 was support. And given the fact that it did make a move yesterday, I wasn't confident enough to hold into $1.80s. So because of that, I ended up getting out most of my position. So I got out here at $1.96. This candle here was $1.91. And what I saw, here, let me see if I can find the candle for you guys. Right here. Right, okay. So you see at around 7:45, you have a big red candle on about 20,000 shares. Similarly, this candle here, very, very small body, about 2 cents. This one was on 10,000 shares. And I recognize that this candle here was not breaking. I think it was a different candle here, but anyways, this area here had a healthy number of short sellers,
SCZM.
people selling the stock. And when I realized it was not breaking the 190 very clean, and it popped back up on very little volume too. When I saw this, I realized that 190 was likely not breaking. And you can kind of see from the 5-second chart that I was slowly grinding back up. And that's when I planned my exit, 197, 198, and 197. I gave it time to break down below the 190 to prove myself wrong. I got out more than half of my core position in this area here. And when I realized it wasn't going to, I had to get out. We need to exit before the liquidity dries up. You can see how the volume is dwindling. And if you have a large size, if you have maybe 10, 15, 20, 30,000 shares, it's going to be very hard for you to exit. So let's look at the volume here. 70,000, 20,000, 20,000. This one is 40, 50, 10, 20, 60. And once the volume starts drying up, you can see how it grind all the way back up to 10. Our exit was at $1.96. So for beginner traders, I generally don't recommend taking this short here because on the surface, it doesn't look good. But if you have stats and you track these type of moves and you know what to look for specifically, you can take the short. You can say it's a breakdown below this 222. It kind of was, but you don't want to size in full size on this breakdown. That's why I sized in partials. I think I had three trades here. And then I saw this little 216. I said, let's just add here. And at that point, if I added here, I have to reduce my risk level. So that's the trade for today. We essentially bottom ticked the stock. We shorted on the 220s. Our short average was 220. We got it around $1.96. We bottom ticked partials at $1.91. And the stock is now above $2. So if you ask me right now what I think the stock is going to do, it's probably going to start grinding up very slowly, very, very slowly. It'll probably grind and then it'll have a fade. It'll have a big drop. Someone will force the stock down. It moved up on no volume. There is no catalyst to push this higher. These were all just liquidity events. People were stuck here, can't get out, forced liquidity event so they can drive the price back down. Held it to $2, could not push it back up. So I really do expect this to fade below 180, but because it's doing this type of move, I can't guarantee, or I can't be sure what it wants to do right now. And because of that, and because of the candlesticks that we saw in the 5-second, we saw that there was some selling, but levels weren't breaking. We know from the daily, I'm going to leave this chart here, that the 20 moving average, as you can see, is, where is it? 193. I believe when I was trading it was at 190. So the line in the sand for me was definitely 189, 190. And the reason is because yesterday it tapped 189, 190. Today, if we look at support, it'll definitely have to tap 190. And if it's not breaking the 190, it's gonna push it's gonna push back up. It's gonna slowly grind back up. So we got out. Now let's go back to CETX since we're done with AHMA. And as I said earlier, it's incredibly choppy. I may not have the best ways of explaining this, but look how choppy it is. This is a ticker that went up because of a 1 for 10 reverse split. For those who don't know what that means, it means the price is going to go up 10 times, and the shares that whoever bought this, whoever owns these shares, are going to be reduced by the equal amount. This way you keep the market cap the same.
SRFM.
And these are massive dilution events. And you may ask why. It's generally because they need to keep the stock above $1. But I mean, this is well over above $1. So I'm not exactly sure the reason why. But if you've been trading for a while, you will know that CETX, along with a few other names, have a very consistent history of making these type of moves, of having offerings or having reverse splits. And that's kind of what's going on today. But this move
USD.
from 290 to 620 plus SSR plus 10 cents board fees is not a setup that I want to take. You can't just short any and every single pop that goes up, because it's not going to work and you're going to get yourself into a lot of trouble. Now, this is a very good moment to compare AHMA and CETX. Now, you can see how these move. CETX made a push from 290 to 620. This is over 100%. Meanwhile, AHMA is a very surgical liquidity event that went up from $2.20 to $3. The fade and the drop proves to
PCSA.
me that this is going to go back below where it started. Of course, I could be wrong. You can always be wrong, but I was quite confident in this trade. Meanwhile, this one here, I don't even want to touch with a 10-foot pole. Yeah. I'm trying to find a way to justify trading this, but there is absolutely no way I can even consider it.
DSY.
There's too much volume. If you look at the daily, 13 million shares. 13 million shares is not even a lot, but the price action, the way it's moving, is just terrible. It's just not good for a short seller right now. There are so many people who are trapped in this, and when I see names I'm familiar with moving up like this on SSR and not fading, my first instinct is that there are way too many early short sellers. Way too many early short sellers. People who trade for a while, they recognize names that typically gap up, push, and fade back to where it started. CETX is definitely one of them. And because of that, when they see this type of news, they pile in. And when it does not fade, when it does not drop, it just creates this nasty squeeze. But it's so choppy because there is no good catalyst to justify this move or even holding this level. But shorts are trapped. You have too many conflicting factors. You have trapped short sellers on a historically very weak chart, and you have fresh momentum and SSR that's pushing the stock, but it's not pushing. There's really high board fees. This is on trade zero, by the way. The stock is pushing up and down, moving in a range. So what needs to happen? Well, the shorts need to clear out all the longs, or the shorts are going to get squeezed. And more likely than not, this will just make a quick push and slowly fade. But I can't even be sure this push will even happen, because if you look at it, it looks really weak. But at the same time, it's not moving. You see, when a stock gets this thick, you're going in circles. At the 434 level on the level 2, it looked really weak. But again, because it's SSR, it needs to go up. Shorts can't dump it. This looks really weak right now. A lot of red prints, stock's not moving, and then next thing you know, it's 442. So, but then look at the spread, 437. So you can't buy this and you can't short this. All right, you would have bought 434, and then are you taking profit 438 or 440? You make 6 cents, and now it's back down. So now, if you're still in it, you're like, oh darn, I need to get out. But again, it's also SSR, so this will probably come back up to 425. It cannot just flush down like 428. It's so choppy. I'm trying to read this, and I can predict what it wants to do, but it's not doing it. It goes down 5 cents, up 10 cents. Down 15 cents, up 15 cents. Down
CWD.
10 cents, up 20 cents. Down 30 cents, up 10 cents. It's moving in a range now. So typically these are not our setups. I would love to have taken another trade today, but you can see how selective my criteria has to be. And, it kind of has to be that way. It has to be that way. I have about a 70 plus win rate. And that explicitly tells me what I can and can't short. Like even right now, I mean, do you chase it? Because now it's back up to 420s. Right. So this one won't have a problem with liquidity, but it's the price action is too choppy to even consider.
ILLR.
It likely will roll
AUID.
over, but I'm not willing to put money on a stock that I can't control, that I can't see, or I can't imagine how it's going to get there. If I am not sure that I mean,
LGCL.
we are confident. In fact, anybody who looks at the stock and its history is very confident it will roll over. But when and how, that's a completely different story. So I'm going to end the video here, guys. This is my daily recap. We shorted AHMA. This was a liquidity event from yesterday. After this push and fade, it didn't hold. It pushed higher on very limited volume. There was a massive liquidity event in the morning that pushed the stock to $3. And we just shorted the backside fade, the easy backside fade. There's no reason why I need to go and fight CETX to make 10-20 cents. I mean, I can, but I mean, we saw this at 470 and 480s, but there is no reason why we need to fight the tape. It's so choppy. It's unpredictable. You have to set a relatively large risk tolerance, like a relatively large risk. So if you want to short this now, are you going to risk what, 470? We saw what happened at 470s. Broke back above it, came down below it. Now you see more short selling. So it will fade. We just don't know when. We don't know how it's going to get there. We don't know how choppy it's going to get. But if you're experienced at tape reading, you can see from the prints, it's slowing down. Yeah. I'm going to stop looking at this because this is how FOMO starts. And if we take a short here, I will not forgive myself. Like a lot of times when it comes to trading, we are watching 90% of the time and taking those 1 or 2 setups that we are very confident in. Like that. 370s. So if we shorted the 470s, we would have been okay. But the flip side is, because I didn't like the way the tape was moving,
CWD,
I said no. And honestly, I think that was the right thing to do.
LGCL.
We watched it, we analyzed it, we saw how choppy it was. And unless you're willing to set a really high risk level with a chance that you're going to get chopped out, these trades are generally not worth it. If I had to make a prediction, I think this will actually tap $4 again. This drop was too fast. People are going to want to get out and cover, and this might push it back above $4. I don't think it'll stay above $4, but it will definitely tap $4. We're still hugging the VWAP at 384. So anyways, that's our daily recap. Hope you guys enjoyed the video, and I will see you guys in the next one.